Avoid crypto tax mistake number 4, the missing transactions dilemma by Crypto Blocko. And this is part 4 in the series on how to avoid 7 costly crypto tax mistakes. Remember, your goal is to get a crypto bullseye, and our goal is to help you get there. I'm your host, Kirk Phillips, the Bitcoin CPA. Quick disclaimer, all of our content is for informational and educational purposes only. This is not tax, legal, or financial advice. I'm a CPA, but I'm not your CPA. Tax advice cannot be given unless there is an official engagement letter. The missing transactions dilemma. So missing transactions is one of the most common pitfalls. If you do not have missing transactions and you are a crypto user, you must be a new coiner, or you are very lucky, because almost everyone has missing transactions at some time or another. Because you can have many exchanges and many wallets, and that means your transactions are bouncing all over the place, and the likelihood of having missing transactions is very high. But you want to minimize that. Some things are in your control, some things are not. So it can be the result of a bunch of huge mistakes on your part, but it also may be outside of your control as well. The key thing here is that it can be very, very difficult to solve if you have missing transactions. Especially the more missing transactions you have, the more difficult it can be. How do transactions go missing? Well, they go missing for a number of reasons. For example, sloppy record keeping is one of the biggest ones. Remember crypto tax mistake number 1, which is paying higher tax from poor organization. If you haven't seen that one, go back and watch that video. Transactions can also go missing from defunct or closed exchanges, which is very common. There's many, many examples where exchanges have gone defunct, bankrupt from a hacked or from other reasons. Okay, then of course, one of the biggest ones is losing your private keys or your seed phrase. So you basically lose your wallet and you lose crypto assets and potentially the transactional information. See, most people don't think about this, but there are 2 assets that get lost when you lose your private keys and lose access to a wallet. One of those is your crypto assets. The other is the information about the crypto assets, but people don't think about the latter as being an asset. And of course, there's hacks and other reasons why transactions go missing. What is the impact of missing transactions? Well, you end up with gaping holes in your data. Let's just say, for example, you have more than 50% of your transactions are missing. Those are really gigantic gaping holes. How are you going to fill those holes? Massively inaccurate tax calculations is another impact. So again, the bigger the holes, right, the more inaccurate your tax calculations can be, which means that you may end up paying higher tax, and nobody wants that. Once again, the impact in our 7-part series is paying higher tax. You will see that as a continuing theme. And of course, another insult to injury is paying 3 times more in professional fees. Now, it may be 2 times more, it may be 4 times more, maybe more than that, but just for illustrative purposes, you could pay 3x in professional fees just to sort this out from poor organization and from other issues that happen to you. Okay, missing transactions equals getting tax wrecked, and nobody wants to get tax wrecked. Don't do this to yourself. Like we said, some things are outside your control. We get that, but the things that are in your control, which is most of it, just don't put yourself in that position. I tell you what, if you experience the pain of having missing transactions, paying higher tax, paying more in fees to get the tax calculations complete to a reasonable manner, you will never do it again. I promise you. Experience the pain, you'll never do it again. And the thing is, the impact can cascade years into the future. So it's not just the current year. And for example, if you are assembling 2 or 3 years at the same time, trying to get yourself into compliance. It could impact those 3 years. It could also impact future years. How to solve this dilemma of the missing transactions? Well, it can be a forensic reconstruction exercise. So that's one of the reasons that you could pay a lot more in professional fees or pull your hair out in the process, which you're going to have to do anyway, because you can't hire somebody to do all the work. You're going to have to gather your transactions. So, of course, one of the big things here is to document the issues and write memos. This is called the CYA file. Cover your ass. Remember, document, document, document. Make sure to document these issues. That will provide support for closing the loop and closing these gaping holes that we're talking about. So make reasonable estimations where you can. Be reasonable and consistent. Be conservative is another way. If you've put yourself in a pickle where you have missing transactions, you're going to have to go conservative. What going conservative means is paying higher tax. In other words, you may have to, in some cases, select a zero basis, which means you could have 100% gain. Now, Bob got tax wrecked. How did that happen to Bob? Well, Bob has no data from one exchange and one wallet. Now, the wallet he used for tipping and expenses. So he only sent Bitcoin to a browser plugin. He used only small amounts, but he used it for tipping and expenses, and really whatever he sent into the wallet, he spent. Okay, so he at least knows that. Now, the one exchange that he has missing data from, he also knows that he only used that to buy 2 particular coins. That's the reason that he opened the exchange in the first place. So it may not seem like a lot of information, but actually it is. So he's narrowed it down to knowing that it's only 2 coins. And in the wallet, he knows he only sent Bitcoin into that wallet. So tax Rekt takeaways. So one of the things that's most likely going to happen here is to get professional help, because forensic reconstruction is going to take someone who has years of experience and understands how you can come up with a reasonable way and the best possible way to complete the calculations so that you can get your tax return complete and your tax calculations complete. All right. And actually have backup documentation to support that. All right, so one of the key things here is also, where does the trail go cold? Where does the trail pick up again? So you need to identify that. Where do you hit the end of a line? Where do you hit the brick wall? Once you know those points, that is the place where you can then determine how you start to fill the hole in. But you have to identify that. You have to know the what's so with the missing transactions. Those are the key things. Where does the trail go cold? Where does the trail pick up again? And of course, you may have to change how a transaction is categorized. So going back to Bob's tax Rekt example, for instance, the wallet plugin that Bob lost all the information for, he was able to identify the transactions, the Bitcoin transactions that went into the wallet. Now, he lost all of the transactions as far as what he spent the Bitcoin on and what it was for. But again, these were very small amounts, so he knows all the transfers came from a couple of exchanges and a couple other wallets and went into this missing wallet. So those would normally be transfers, which would be non-taxable. However, in this place, again, going back to where does the trail go cold, at that point in time, instead of making that a transfer, which is technically accurate, because you have no other information, you could change that transfer and say it was a spend at that point, which may not be 100% accurate, but it is the best you can do in this situation. And therefore, those transfers are spends, and the amounts were fairly immaterial. They were small amounts, as we said. That takes care of the wallet, for example. Now, this is a complex topic on forensic reconstruction, so this is beyond the scope of this particular video, where we're just trying to illustrate the point of don't get yourself into this situation of where how you can begin to solve it. So that could be another video and another course for another day, a deep dive, if you will. So remember, the number one thing you need is a process, a plan, a roadmap, a blueprint, especially when it comes to crypto taxes. Don't get yourself tax wrecked. Remember, your goal is to get a crypto bullseye, and our goal at Crypto Blocko is to help you get there. And an investment in knowledge pays the best interest. So please support our channel. Go to the bottom, click like, subscribe to the channel, share this with your friends. We need all the support we can get so that we can continue to provide great, high quality information to you to help guide you in your crypto journey.